All right, time for Futures in Focus. Joining us now, Bloomberg's Sarah Ponczek. Sarah, we were just talking about DC. What kind of volatility you need to be pricing in? What's the market actually telling us?
Right. So if we take a look at VIX futures, they're all now within a point of spot futures. So if you take a look at November, if you look at December, January, they've all kind of coalesced around the same point. We don't see the same arch that we had seen just a few months ago, a few weeks prior to the election, for example. However, a day like yesterday, even though we ended up seeing the S&P 500 close higher, we saw a rally, large rallies in certain pockets of the market. We actually saw the VIX close higher, which was an interesting take. Yes, today we see the VIX higher too, but granted, stocks are falling now. But the idea, I was just speaking to Max Gauckman. He is the head of asset allocation over at Pacific Life Fund Advisors. He said that to him, once President Trump starts trying to sue his way out of the loss, if he can, then what becomes a key tail risk is actually what goes on in this lame duck section. The idea that this unpredictability that we have had over the last 4 years could just ratchet up even further until January 20th in the form of firings, cabinet reshufflings, possibly some executive orders. Now, he says that those are really hard to predict what they might look like, but it's possible he'll really try to cater to his base. So focusing on immigration, focusing on trade, well, that's something that could affect markets. You also have to think about how this all affects the stimulus talks, too.
Sarah, do we really care about any of this? Like, we've got a vaccine coming. Everything's going to be fine.
Yesterday, it seems like the answer to that question was no, that if you get a vaccine, well, then what does it mean about stimulus? Maybe you don't actually need a very large fiscal package, maybe not one at all, if you're going to get a vaccine coming sooner rather than later. But the point being made, and we see this possibly reflected in markets today, is the fact that, yes, this was extraordinarily great news that we got from Pfizer yesterday, but there are still question marks around how long it's going to take for it to be approved, for it to be distributed, for us to finally get back to a world of normalcy. But also, if there's a light at the end of the tunnel, does that mean that governments, localities, for example, start cracking down even further on restrictions, and that starts affecting the markets and the economy?
So in the short term, talk to me. I got to mention Gamma. We have like 30 seconds left. The big move up that we saw yesterday, those that were buying call options for that, what then what happens in the Gamma world when you have to cover those shorts?
Right, so Gamma has really been in question the last couple of months, ever since September. I saw a statistic today that said that yesterday was the most active day for U.S. options on record.
Whoa.
So certainly when it comes to your Greek terms, Delta, Gamma, certainly still in focus. It could mean that you could have outsized moves either which way with such active options markets.